Hi everyone, good morning and welcome to today's morning report with me, Richard Perry, Market Analyst at Handtech Markets for Monday the 4th of August. The European trading session has started reasonably well. Bit of support's come in and that has helped just settle investors slightly, and the news over the weekend that Portuguese Central Bank was announcing a plan to try and rescue Banco Espírito Santo, and that has certainly given investors a little bit of a buffer, a bit of support, and also the news also that the Chinese services PMI was still fairly positive, actually 54.2, just slightly down from the 55.0 last month. Asian markets were fairly mixed in Asian trading, but today there had been a nicely supported open. Although the DAX is slightly down now, it's just drifting back towards flat. But at the moment, it's in terms of the market activity anyway in stock markets, reasonably well supported. The issue, I suppose, that we're looking at the moment is the fact that you've got this VIX index, certainly on the in terms of the equity markets. The VIX index has spiked sharply higher, and that suggests that the fear that investors have had in the recent week or so with this prospect of the Fed tightening. I know it's unlikely to be seen anytime soon, but still markets are now just concerned about the fact that there could be wage growth coming further down the line, and that could give the Fed a bit of a nudge in terms of moving sooner rather than had been expected on the second half of 2015. In terms of the dollar index, that expectation has certainly given the dollar a big lift, although on Friday, after that non-farm payrolls report, the dollar had a bit of a correction. Interestingly, it's back to that 81.3 level. If you're going to go on pure technicals, you'd say that's a bit of a pullback towards that breakout support, which was the old resistance, is now the new support. So 81.3 is a bit of a pivot level on this dollar index, and we'll see how this one pans out. But certainly, we have had a correction in the dollar on Friday afternoon into today. It's fairly mixed. There's no major movements as yet. The euro, which had a nice positive rally on Friday, is fairly flat at the moment. The other factor that I will talk about in a bit is the Kiwi dollar as well, which had a nice recovery after a big sell-off on the Kiwi in recent weeks. In terms of what we're looking at for today, there's not a great deal of economic data due. UK focused is on the construction PMI data. This forecast just dropped slightly to 62.0, but I think you can see on this chart that it remains pretty strong still. Above 60 is pretty much a very strong PMI number there. So we'll see how that goes at 9:30 this morning. But that's pretty much the only real economic data that we've got going on today. In terms of my chart of the day, I was going to say that the Kiwi dollar has been in a big decline recently, and the move has seen a sharp correction back down, way below its below its 144-day moving average anyway, but that's about 350 pips in the last 3 weeks. But slightly on Friday, we did see what was very close to a bullish key one-day reversal actually on the Kiwi dollar, and a nice reaction on the downside, following on from early weakness in that Kiwi to rally to above the previous day's high, which is an outside day, and we've had a fairly positive actual reaction today. And early weakness has just been unwound slightly again today. So that's interesting that's coming with the RSI having hit 30. And the stochastics also beginning to turn up as well. So signs there are that perhaps a bit of support coming in for the Kiwi dollar after some significant weakness that we've seen. This is the intraday hourly chart. And a move above 85 big figure. That 85 big figure had been a bit of a pivot level of old support turning into new resistance turning into new support, and that's around where we're starting to get a bit of a floor in place now. So 85, I think, is a bit of a handle that you should perhaps look at on the upside if you're looking to possibly look for a recovery in this chart. I think holding support above 85 figure looks to be important there. In terms of what we're looking at on breakouts to the upside, you'd say that there's another old floor around that 85.30 to 85.35 point. I think is where you'd be looking out for, and then above that you're looking at 85.60, again being an old support. Being a new resistance, so 85.35 and 85.60 on the upside. I think if you start to see a development of this chart above 85, then I think that could be the potential for a rally, because there's quite a lot of a move to the downside that could well be unwound now. In terms of where we're looking at on the moving averages intraday, this is on the hourly chart. You certainly got a coming together and a bullish convergence of these shorter moving averages, the 21 hour, 55 hour and 89 hour moving averages all coming together and starting to turn up in bullish sequence. That suggests that possibility of a nice consolidation and push to the upside. So we're looking out for an improvement in this Kiwi dollar chart, certainly. And as I said, there's quite a lot of unwinding that could well be seen here. And the key resistance on this chart, on the daily chart anyway, is around this 86.50 mark, and I think that's what we're looking at in terms of a possibility of an unwind if it does happen. Anyway, I wish you good luck in your trading on the Kiwi today, and I will speak to you later. Thank you.